Disagreement in the CTP methodology is identified when two equivalent lines act the opposite on two correlated assets. For instance, support for NQ and resistance for ES. And why we don't trade on disagreement? Because it's like flipping the coin. One of them will break its level, leading to a losing trade. Or the market, the confused instrument will cross its level so many times. Usually, it will be the follower. The follower is what I call the confused one. And the follower may cross its level many times, possibly leading to several losing trades, because you go long because you think it's a support level, but then it tries to follow, turns into resistance, but then it tries to respect the support level again, so it goes up and down and up, leading to several losing trades if you take these trades. And therefore, guys, we do not trade on disagreement. We wait patiently until we identify the breakout candle, the sharp movement of the break. We wait for the retest, and it's an A+ setup for us to take the trade. Still, we want to be able to anticipate the break movement before it happens. This is where a third instrument comes into play. Correlation between two instruments can be utilized to anticipate their reaction to significant price levels, as we've seen so far. And for two highly correlated instruments like ES and NQ, there might be many CTP signals because both tend to reach their magnets together. Adding a third instrument, a correlated instrument, can give you clearer insights when you're confused. For example, on disagreement. For ES and NQ, it can be RTY or YM. And for GC and SI, it can be HG. We also found that on high impact news, the Bitcoin futures can also be a good candidate for ES and NQ to be the third instrument. In this example, you can see the signals generated by the EG correlation multiple indicator, which can analyze two instruments in the background. You can see here the NQ chart, while ES and RTY are being monitored by the indicator in the background. And here is another example. Here you can see ES, and the indicator analyzes NQ and RTY in the background to generate correlation signals. So here, NQ is the main asset, while RTY and ES are being analyzed in the background by the indicator. And here, ES is the main asset, while NQ and RTY are being analyzed by the indicator in the background. So how to trade multiple CTP? How to find CTP opportunities when three instruments are considered? So for two instruments, we had the following steps. First, you took two correlated assets and attached their key levels to your chart. Then you monitor them, waiting for them to reach their key levels together. So for three instruments, you follow the same steps. First, you take three correlated instruments and attach their key levels to your chart. Then you monitor them together, waiting for them to reach their key levels together. For instance, you wait for RTY to reach its level and NQ to reach its level and ES to reach its level. So you monitor three instruments and their reaction to their key levels together. Now I want to discuss the following. In what scenarios it can be better to add the third instrument? In all scenarios? Because look, there are very good opportunities when only considering NQ and ES. When the risk to reward ratio is high, we don't want to miss those trades. And adding a third instrument may decrease the number of very good opportunities since no CTP signal will be generated when there are no equivalent lines for three of them together. Let's take a look closely here. This is ES and this is NQ here. The correlation indicator is attached to ES in this example. So you can see what beautiful signals are generated when considering ES and NQ. Now look at the short signal here. This short signal was generated at the high of the day, okay? It's a perfect one. Now, when adding RTY, the third instrument, the signal disappeared. Why? You know, since there's no line here on RTY, there's no equivalent resistance line here, so the beautiful short signal would not be generated at all. However, here there are equivalent lines for ES and NQ, and a CTP short signal is generated. So in what scenarios adding a third instrument can be beneficial? So my approach goes as follows. You remember, when adding RTY, it would eliminate this beautiful short signal here. So my approach is to add a third instrument if I'm confused. And this happens when there are too many stacked lines together. The probability of having too many lines on RTY at the same time is low. Thus, adding RTY can help in avoiding confusion in cases when there are too many lines on ES and NQ. Second, on disagreement. When ES and NQ disagree, monitoring RTY or YM and see what they are doing can help anticipating the market move. In many cases, when I see a setup like this, adding RTY or YM would probably give me clear insights. So in this case, ES and NQ disagreed at this point, confusion, but when I looked at RTY, I could see that its level turned into resistance. So resistance, resistance, support, NQ will probably be the follower here and will break its support level. Okay, so I add a third instrument if I can't read the market, when I'm confused, on disagreement, or when there are too many lines, and I need to be able to filter them out more efficiently. So this can be happened when I add the third instrument to my analysis. Again, how to find CTP opportunities when three instruments are considered? We take three correlated instruments and attach their key levels to the chart. Then we monitor them together. So this is the scheme for three instruments. Now, I have a question for you guys. What's the scheme for four instruments? Like if we add YM to our analysis.